Hey everybody, Nick Inman, founder of VolumeProfileTrader.com on Tuesday, September 25th, and looking here at the S&P. And before I get started on the S&P, I just want to say that if you were net long going into today you lost money. And I would be highly surprised if anyone was net long today and didn't lose money. And the reason why was because it was just a broad market sell-off. It wasn't, one sector oriented or two sectors. It was the entire market. And I don't think the S&P here gives the necessary picture of what the market's trying to tell you. So before I get into my stance, am I bullish, am I bearish, where do I think the market's going to go, let me pull up two things that I did today. And the first was on the Qs. I bought these 69 by 68 put spread expiring in October. So it was for 37 cents each. So what I essentially did was for every spread I bought, I paid $37. My max gain on that is $1. The Qs have to trade down to 68 by October expiration, and with that time, I can fulfill that entire dollar. So, for every spread you bought, you are risking $37, unless if you put your stop at break even. However, those spreads are already up 50% from where we bought them. So it was really a nice move, and we saw a breakdown in the Qs. Kind of what we were looking for, what I talked about during the weekend was we have this potential for a pullback. Just be prepared for it. Don't be overexposed, and just be, take precaution, because days like this happen when too many bulls, or in general, too many buyers or sellers are on one side of the market. Well, all of a sudden, if there's no more buyers in the market, then all you have is a bunch of cheerleaders. So what do those cheerleaders really do? They start getting nervous, some start selling, and then all of a sudden the snowball effect happens, and then you have a day like this where you have a big down day. Now, whether tomorrow is an up day, you see this, for example, right here, this 34 SMA, we're at it. I'm not saying it's going to hold or anything, but if it does, you're putting yourself in a position where you have a chance that if you don't like the way that the market's currently looking, you can scale out into some strength. And not saying that the market won't go to, the Qs won't go to 72, the next week. I highly doubt it, but hey, anything's possible, right? So let's, the other position that I initiated, TZA. Now, this was, just a speculative. Let me get into this market. Let me get a little more bearish, and let me see. I want some leverage, but I don't want too much leverage. So what I did was I bought a small amount of TZA, and you're thinking, you don't want too much leverage, but you bought 3 times, an index as far as price movement. Well, yeah, but I'm used to trading options, so it is deleveraging some. So TZA bought it at 14.44, if I recall. That was around the price, and it's about a 4th or 5th position of my, a normal size position for me. So it's a relatively small position. But if there is more upside in TZA, or I should say more downside in the markets, this should, benefit handsomely. And all I'm going for is, a little bit of a trade. What if we get, I'm going to pull up the S&P here. What if we get to, this big high volume area here at the top of it? There would be nothing wrong with the trend if we did that. But, thinking of the TZA position, that's a nice trade. Thinking of the Qs as a cheap way to hedge, that's a nice trade. Getting out of American Express today because it wasn't working, that's a good exit. There is no, the spread, to be honest, right when this trade happened, it didn't work for me. And, it's just one of the few occurrences where this point of control and you see a nice breakout bar off of it. It's one of the first times, not one of the first times, that was a horrible line. One of the few times that, it doesn't work in that type of circumstance. Let me give you an example of where it does work. Home Depot, you get the breakout off of the point of control and you have a nice run-up. So that just kind of gives you an idea of what it can do. So American Express didn't work. Yum Brands, it was working today, and then it got, it got hit hard, and a lot of my profits got beaten out today. Now, I want to say this. I scaled down on half of the position. So I locked in some profits, and it's still, up maybe 20%, but, I left at one point today, it was probably up 50%. So I did leave money on the table. Not great risk management there, but I did lock in some profits, and that is what's important. Like Intuitive Surgical, bought this yesterday. What were the expectations? The expectations, a breakout to the upside. Guess what? Right when that thing didn't break out today, I was out. I didn't want to be a part of it. It was a speculative, looking at what was going on here. We had, another higher low, a big volume day. So, getting involved at the top, what you'd be playing for is a breakout. You're not playing for, looking for it to break out, but if it doesn't, I'm going to hold. No, you are looking for a breakout. It didn't break out, so you're out of the position. All right, so let me get back on track to what I really want to show. And normally I stick with the monthly charts, which actually shows a pretty good triangle pattern and a failure. Surprise, surprise, off the point of control for the current month. So the current month, September, the point of control was down at 1435 a couple of days ago. It shifted up to 1455, and all of a sudden, we slam away from that level. So what does that tell you? That tells you that the point of control is a level to trade off of. You're seeing a good move off of that level, and it happened pretty close to immediately. You're looking at the point of control just a couple of days ago down here at 1435. We got a few more days of volume. It was probably last Friday. Maybe it was even yesterday that it happened, but it was, not too long ago. Now, the NASDAQ has been like that since last week. What happens this week? We gap under, surprise, surprise, on Tuesday. What's resistance? The point of control level, and we sell off. And where do we go to? Straight through this high volume area here, right at these lows, but we go down to value area low for the month. All of a sudden, you get a little bit of a bounce, sellers covering, end of day, typical stuff right there, right? So let's go into the chart that I think will give you, the best perspective. Okay, so what you're looking at here is just a standard 15-minute candle chart. The difference is, though, you have the weekly volume profile behind you. So what you're looking at is the point of control, the value area, the high volume areas, the low volume areas, all for every week. So, Monday starts, you have a new profile that starts. So what I'm more interested in is these point of control levels and, the value area extremes and how you can use them to your advantage. So, what you can see today is we came straight down to 2 weeks ago, the point of control. And so far, we've stopped dead in its tracks. The last hour of trade, we bounced from there and then, rolled over again. But you can see almost to the penny, it was a great, very short-term trade, and obviously kept rolling over with the trend. But you can see great level of support for now, of course. I'll go in a little more detail. Okay, 2 weeks ago, the value area high ended up being 1459, okay? Every time in the week following, 1459, was it right to be a buyer or seller exactly at those levels? And it was right to be a seller. Obviously, we see the market got hit every time. The following week, or I should say this current week, let's go into a little more detail. Now, it didn't quite get up to even this last week's value area high, but you can see there is a big chunk of volume here, and price did get up to those levels. And what happened at those levels? Well, it rolled over. So you saw a little bit of a momentum, some lower highs, some weakness, and it's hard to judge that in real time, but you have to trust these levels and, realize how accurate they can be. So now that we've, that was a little bit of a synopsis of what you can get using volume profile. So it's really the most helpful tool, I'll tell you that. But it gives you clues into what the market's trying to do. So, take, for example, the NASDAQ. Where does the NASDAQ fail? Point of control, close the gap. Nope, didn't even close the gap. Point of control for last week, from there, and you're looking at a 15-minute chart, just not once did it really close above those levels. And even if you do say that the 11 o'clock did, the next 2, 3, 4, 5 bars all away from that point of control level. So it shows you that they're was resistance there, and then all of a sudden, where's the target? Well, we are 2 points off of the point of control from 2 weeks ago. So it just kind of puts it in perspective. And, basically what I'm trying to say is, okay, the market's going to move from one high volume area to the other, from one point of control to the other. Your job is to manage your risk accordingly. If they keep going higher and higher, the point of controls, then obviously you want to stay on the long side. But when they start to shift, you need to be aware of that, and you need to manage your risk appropriately, because if you don't, you're going to put yourself in a situation like today where the market, takes a tumble and you're too long and it hurts your account way too bad. Let's say you were close to fully invested or something. These days will just run you over. But if you're managing your risk, if you took the last couple of weeks to raise a little bit of cash, staying involved to the long side because you never know, but, raising some cash and realizing that there are opportunities for the market to come in and there would be nothing wrong with the trend, just be aware of that. Manage your risk appropriately. Focused on your dollars and realize, okay, let's say your account was up X amount of percent for the month. Well, just realize that that month is close to ending. You can lock in some profits and then look to next month to add to that. It doesn't have to be one continuous stride higher. You can take profits, reevaluate the situation, and then get back in the game. It doesn't have to be, just ever, ongoing flipping profits, always staying, fully invested in the market by being both long and short. That is a way to go crazy. Wait for things to develop and then manage your risk against those levels. So I hope this video helps. Overall, I'm definitely a lot more market neutral than I was earlier today, but that's for the better, because what it gives me an opportunity for is I can look at names to get involved in now, and whether it be long or short, and obviously by getting out positions, by taking some profits, taking some losses today, I've raised some cash, and now I'm a potential buyer of the market, or maybe a seller of the market in terms of getting short. I'm not saying that that's what I'm going to do, but I do have a few bearish positions on the Qs and TZA. So I'm going to let those work, and until they stop working, I'm just going to trail my stops. It can be as tight as break even if you don't want to take a loss on the trade. And there's nothing wrong with that. Just realize you're managing your risk very tightly. It's in profit zone and you refuse to take a loss. A lot of professionals do that, and a lot of professionals save a lot of money doing that. So I'm not saying that that's a bad idea. So anyways, look for the potential for more downside, but realize that we are still range bound. We're coming up on end of the month. We could easily bounce here for a couple of days. If the market continues to roll over, continue to raise cash. There's no reason to, hold positions that turn into losing positions. That's the idea of trailing stops, is getting out of your positions when the market starts to roll over, i.e. trailing stop and, getting hit. So take care, have a wonderful night, and I'll talk to you tomorrow.